Hi, I'm Donna Simon, a realtor with Realty One Group Dockside in the Myrtle Beach, Grand Strand area. Thanks for joining me today. So your mortgage has been approved, you picked out your home, and the seller has accepted your offer. Oh, happy day! Now you want to make sure that you don't run into any unnecessary hiccups as you go through the loan process. I am going to share with you 10 important rules to follow to ensure a smooth loan process. I call them the 10 Commandments. Rule number 1, thou shalt not change jobs, become self-employed, or quit your job. Job security and salary are two important factors when determining your pre-approval. And a career change could mean an income adjustment and revisions to the amount you are approved to borrow. Rule number 2, thou shalt not buy furniture, a car, truck, or van, or you may be living in it. Large purchases can certainly change the equation for the lender and will make you seem like more of a risk. Your lender will need to factor in the payments to your debt-to-income ratio, which could mean a delay in settlement or a cancellation of your pre-approval. Rule number 3, thou shalt not use charge cards excessively or let your accounts fall behind. Don't miss any payments because missed or late payments could deny you the loan. Also stay away from opening up new credit cards. Your credit score could change because of new credit, which may mean your interest rate might need to be adjusted. Rule number 4, thou shalt not open or close any lines of credit. If paying off debt, consult with your lender before you do. It can hurt you if you close out an account or reduce your cash reserves. They will want to know where that money came from. A part of your credit score is your length and depth of credit history and your usage of credit as a percentage of what you have available. So talk to your lender. Rule number 5, thou shalt not spend money you have set aside for closing. Well, that's a pretty obvious one, so let's move on. Rule number 6, thou shalt not omit debts or liabilities from your loan application. They may think you have other debts they didn't see when your credit was pulled, and this raises red flags which you don't want. Make sure to organize your finances prior to meeting with your lender. Rule number 7, thou shalt not originate any inquiries into your credit. Of course, that may mean you are wanting a new credit card or a new car, and as stated earlier, don't do it. Rule number 8, thou shalt not make large deposits without first checking with your loan officer. Adding to assets isn't a problem, but you will have to provide complete documentation of any deposits other than your paycheck. Contact your lender if you received a bonus or are cashing in CDs or receiving gift funds. Communication is very important. Rule number 9, thou shalt not change bank accounts. Large cash transactions such as deposits, withdrawals, or transfers raise red flags. And lenders need to source and track assets. And finally, rule number 10, thou shalt not cosign a loan for anyone. Cosigning the loan is considered a debt for both signers. Possibly if you can show a year of payments made by the cosigner, that will be okay, but again, talk to your lender. Payments on a newer loan you cosigned will be calculated into your debt-to-income ratio. So think of your pre-approval as a snapshot in time. You want to make sure your finances stay as close to that snapshot as possible. Before you actually close, your credit will be re-pulled again, and they want to make sure nothing has changed since the underwriter's last review. One final word. As I've said before, stay in communication with your lender. And when they need something, make sure you get it to them in a timely manner. Okay, well that's it for now. Have a great week, and be sure to subscribe to my channel if you haven't already done so. Bye, everybody.